Hello, and welcome to the latest episode of All In, the Sustainable Business Podcast. I'm joined today by fellow host Mark. Mark, how are you doing?
Hey David, I'm glad to be here. Wishing we had Chris as well, but I'll do my best to make up two-thirds of the show from the host side. So,
Fantastic. And our guest today is somebody we have known for a very long time. So, a very long-standing colleague and friend, Simon Zadek. Simon, I think a lot of people will be familiar with many of the different roles that you've played over the years in sustainable finance and system change and so on. But just give us a quick potted history of how you've got to this position today, and we'll then probe some more about your exciting new role as the founder and the managing partner of this relatively new organization, Morphosis. But give us a little bit of a potted Simon bio, if you would, please.
Sure. Well, first of all, hi, David. Hi, Mark.
hey Simon.
As you said, David, it's been a long time. And so actually, many of the steps that I've taken, one or both of you have had your own sort of in parallel process of moving from point to point. So bits of my potted history are probably a little bit like bits of your potted history, but I know it's
hmm
me that's meant to be doing the talking. So I'm often asked, in fact, I was asked a couple of days ago in a student seminar that I gave, what career advice would you give? And I generally chuckle and advise them to ignore me wherever possible, but really do emphasize that in retrospect, my journey appears to have some sort of logic to it. But in the actual experience of moving from stage to stage, it was seemingly a fairly sort of random process of moving from opportunity to opportunity as they began to arise. So I guess, the early days of sustainable business were really the late 1980s. And I kind of climbed on board around then in the run up to Rio. Did my sort of first gigs in the Earth Summit in London, which I ran, and then kind of moved into sort of parts of the story that the organization I was then working with, the New Economics Foundation, a think tank based in London, was beginning to advance. And for those who don't know NEF, it's been around since the early 80s, a kind of response, if you like, to the kind of emergence of a very sort of neoliberal approach to privatization, which was actually the parallel process that in some ways generated the first round of kind of business responsibility approaches in its first guise. I spent a number of years as a social auditor doing the first triple bottom line social audit or sustainability audit, which was the Body Shop Values Report in 1996. Mark, I'm sure you remember that extremely well.
I
And
do.
then got very involved in what was really the first generation of accountability and responsibility issues down global supply chains, which was really in the workers' space. Levi Strauss was the first company to have some semblance of a code of conduct, the so-called terms of engagement in 1988. I climbed on board into that space at the beginning of the kind of sweatshop campaign involving Nike and many others, and found myself privileged as one of the few actors that was permitted to move from the C-suite in companies like Nike and Sainsbury's and others across to the sort of the communities of practice across the international trade union movement and the human rights community. Ended up chairing the Ethical Trading Initiative, which actually still exists in the UK, a more sort of dialogic-based approach to trying to address issues down global supply chains compared to more sort of compliance-based approaches that were taken in the US and elsewhere.
And I
Moved
still,
to
sorry, just to interrupt, I still refer students to your, I think, 2004 Harvard Business Review article about the Nike journey in relation to sweatshops. And you really had quite a privileged inside track on that, didn't you?
Yeah, I mean, I was an insider outsider. I remember at a fairly drunken party asking a few of my friends in the labor movement, kind of, why am I allowed to play with you and sit within the very organizations that you're campaigning against? The answer was a little bit garbled, but it had sort of something to do with trust. as well as something to do with me not belonging to their community at all, which probably is a bit of a narrative that runs through my my work experience. I moved to run an organization called Accountability, which was a kind of spin out from the New Economics Foundation, focused, as the name suggests, on sort of non-financial aspects of accountability. So the beginnings of the whole sort of corporate reporting, accounting, auditing side of the sustainability equation, kind of drawing from that early experience with some of those ethical businesses like Body Shop and Ben and Jerry's, Tradecraft, and others. Ran that organization for a few years, ducked out sometime around 2009, did a whole lot of sort of C-suite type corporate consultancy work. That was about the time that sustainability was really shifting much more actively from compliance to strategy. You know, I think that sort of happened during the noughties, somewhere along the line, which was quite interesting. And then around 2008-9, I kind of did a shift and decided to stop working in the real economy and focus on the financial economy. Now that obviously is a bit of a binary and is not really how the world is built, but is a sort of useful way of saying, I guess I decided that working with the non-financial corporate community was really not going to the source of what was generating the kind of good and bad across the business community. And the source, in my view, by that time, I decided, rightly or wrongly, was the way in which financial and capital markets worked. I packed up my bags and to my delight, a willingness of my family to migrate, and we headed off to Beijing with no language, no job, no money, and as usual, very little idea as to what I was actually doing, apart from taking a view in the face of the financial crisis. And by that time, we were in the middle of the financial crisis, that the solutions in the financial community were not going to come from Wall Street in London. They had to come from a newcomer that was open to disrupting and had enough weight not to be, say, the Bank of Bangladesh, you know, or the financial center of Lesotho, which could hardly move the system at all. I arrived just in time for PM 2.5 in Beijing to hit 960 against the World Health Organization maximum recommended of 30. And the day after that, I found to my amazement that really anybody I talked to, from a minister to a street cleaner, was only really interested in the environment. And so an opening appeared, notwithstanding my lack of China experience or network or authoritative organization I was working for. And I stepped into the opportunity and found myself at the heart working with Chinese financial regulators on what became the first generation of work on green finance at a more system level. The first time really financial regulators and central banks were beginning to engage. It's a sort of the story of serendipity, of which my entire journey is replete. That led in turn to China taking green finance into their G20 presidency, the only new work stream, in fact, that they launched at the time, which I then ran for 3 years under the Chinese and then German and then Argentinian presidencies. And although we all know that, you know, when you really look at the content of what's happening at a G20 level, it's often rather thin on the ground. The cascade effect, requiring every capital of every country involved in the G20 to kind of figure out what all this green finance meant that China's decision to take green finance into its presidency, particularly the finance track of its presidency, really had an extraordinary expansionary effect on where that agenda has since gone. I was then sort of incentivized, if you like, to move into the UN for a period. I sat in UNEP, or on the side of UNEP, working with the then executive director, Achim Steiner, ran this finance inquiry for 3 years, which again, I think building on the China work was really became a bit of a convening moment where a far wider array of financial regulators, standard setters in the financial sector. Central banks began to sort of crowd into the space. So we moved from a sort of voluntary, sort of investor level approach to ethical investing really into a kind of much more mainstream financial system design with sustainability in mind. From there, I took a step to New York, worked with the UN Secretary General and Deputy Secretary General Guterres and Mohammed for a year as their senior sustainability advisor in their office at UN headquarters, trying to help them figure out how an organization like the UN, which was designed not to do anything about economic and financial policy, hence the Bretton Woods organizations just up the road, could really apply their weight in that space and begin to make a difference. Briefly ran a task force for Guterres on the digitalization of finance and the effect on financing, and then was encouraged to set up an organization in Switzerland called Nature Finance with a kind of mandate of do with nature what we've all done with carbon, which translates into how can you bring nature into the way in which financial decisions are made across the global financial system, quote unquote, in using similar approaches to the way over the previous decade we had moved, not sufficiently, but a lot on the carbon space. 5 years of working, running Nature Finance, well supported by Andre Hoffman and then subsequently others. Again, serendipity, right at the beginning of the Nature Finance hockey stick, as the opportunity was there really to begin to make a difference to, bringing the natural capital agenda more functionally into financial market analysis, the whole standards agenda, all the nature as infrastructure stuff beginning to emerge, where nature sat on sovereign balance sheets. All of that stuff really festered and kind of evolved over effectively a 60-month period, not to its conclusion, but to build the building blocks that were needed now to move the agenda on. End of 2024, I stepped down. I had a year before released a piece in the run-up to COP28 in Dubai entitled Time to Plan for a World Beyond 1.5 Degrees. That had been with a Nature Finance sort of branding, if you like. The waters had parted in some very unbiblical sense, with half of the people thinking I was absolutely brilliant and I'd called Emperor's clothes and now we could finally get on with this adaptation agenda. And the other half of the people, mainly my friends in the climate community, attacking me as disloyal, as pessimistic, and as really doing everything wrong, as of course I've often been criticized of doing. I spent a year trying to build that Beyond 1.5 agenda into Nature Finance while I was still running it. Had limited success. I could see retrofitting was not that easy and decided to step out. And then with my co-founder, Niall Murphy, not from the climate space or the sustainable business space, but a serial technology entrepreneur who's built, run, and exited a number of technology companies over a 25-year period, set up Morphosis with a sort of pure play focus on the kind of beyond 1.5 agenda. Morphosis we'll come back to, I'm sure, in a little bit more detail, but in brief, it's a hybrid. It's a commercial platform as a hybrid. On the one side, it's a private equity platform investing in adaptation solution businesses that are more or less at a Series A to AB level. And on the other hand, it's a sort of policy research advisory platform really focused on the market shaping side of the adaptation economy agenda.
So you mentioned hockey sticks, and my Canadian co-hosts are always talking about you have to go where the puck is going to go next. And I think that potted history you've just given us of a 40-year or so career shows that you've been consistently going where the puck is going next. And so we have to take seriously if Simon is now saying, okay, my focus in the next act is on adaptation. So let's understand a little bit more the argument first of all. We'll get in, as you say, to what you want Morphosis to do, but let's make sure that our listeners and viewers understand what is the essential argument that's so divided your network, you said.
And
Sure.
David, can I jump in and deflect Simon for 1 minute? I mean, first, I'm going to get in as many hockey-related references as possible. Now, the Stanley Cup playoffs have begun. No one listening will know what the Stanley Cup is outside North America. It's kind of like the Ashes, but for hockey, for folks who
And
don't
North
know.
America includes Canada or doesn't include Canada?
Still does. We'll see where things go, but presently still does. But I thought before we go all the way forward, I wanted to ask, from the long history, if you had written and published your paper from 2024 today, how controversial would it be now? And have the folks who critiqued you harshly in 2024 changed their position? Or is that, because I think there's a shift, so my bias is out there, that 1.5 is something we need to plan around and beyond and figure out how to get back to lower temperatures. But what would happen if he published that in 2026 instead of 2024? Partly you wouldn't have been ahead of the curve, but where's the field today in your mind?
So let me answer, Mark, your question first, and then David, I'll probably forget what you've asked me, so you'll have to repeat it. I apologize.
Okay.
So, Mark, without diving into too much detail, let me unpack that document very slightly, because there were 3 different arguments. Yeah, and that has a implication in responding to the question you're asking. So, point 1 was, get with the plan. We're heading to 2 to 3 degrees, and we're completely unprepared, and we're almost dogmatically insisting that we shouldn't prepare for it by continuing to focus on, and then you get to point 2, the 1.5 goal from Paris, which I argued was obviously ambitious and noble and actually had become part of the problem. Yeah. So my second part of the argument was the 1.5 agenda has become a basis for forcing an overfocus on mitigation and has become entwined with a win-win agenda that was in the first instance meant to be empowering, and has become actually a reason for us not moving forward. If only businesses understood, I mean, we've all said it embarrassingly numbers of times, and we've all heard it irritatingly even more numbers of times, and hopefully the 3 of us have stopped saying it a long time ago. But the 1.5 became co-opted by that narrow view of a win-win agenda, which is that there are no trade-offs, and if we just all realize that solar is always so cheap, and I won't bore you with the story, because we all know that it's both true and profoundly untrue. So that was the second part. And then the third part of the story, where I gave 3 examples, and I'll just mention 2 of them in the paper, of the level of change that we needed to think about. Today we have, at that time, we had about 120 million forcibly displaced people in the world, according to the UN, and the sort of outside sort of edge estimates were in the order of 1 billion people plus within more or less the lifespan of a new car, so about half a generation. And my argument was, we need to plan for 1 billion people, and that's not about expanding our current humanitarian approach, which is a bus flush. And similarly on the food side, I had a delicious and delightful poke at the sustainable agriculture community in saying, regen ag is just absolutely fantastic unless there's no soil. Yeah. And so investing in soil regeneration in Ghana without thinking about the fact that at 2 to 2.1 degrees, there is no soil nutrition left. Yeah. And has anybody mentioned that to the farmers that you're keeping in place right now? And what does that mean, really, for how we're going to produce food in low and middle income countries rather than just vertical farming doing marijuana and basil in California. And so that third part of the story was we have to recognize Keynes's famous line, our problem is not a shortage of ideas, but our willingness to set aside some of the best ideas that we've had. And that, our greatest enemy is keeping hold of the progressive ideas that may have worked yesterday, but are absolutely not going to work tomorrow. So now back to your question, I think the first part of the argument, which is, we're beyond 1.5, get with the plan. I don't think that's really in dispute anymore, even although, there are some very odd twists of the story by some of the more notable scientists that will go unnamed for now, that it's okay, it's, we're kind of slipping over and we're going to slip back, and somehow the things that go wrong in the economy will be reversible. So there's still a sort of there's a greater acceptance, definitely, that's emerged over the last 2 years, but there's still a sort of slipperiness to really the implications for us all. I think the second part of the argument, the sort of 1.5 part of the problem, win-win part of the problem, I think I haven't made many friends on that particular part of the agenda. And we still see, and we'll come back to this sort of tension between, is adaptation not just a betrayal, but a political error in trying to bring political pressure on the mitigation agenda. And we can come back to that in a second, because that's closer to David's question. And then the third part, I think we're nowhere. I think we're absolutely nowhere. Even as I speak today, I've been having a debate with a bunch of people about a piece of work and on the African continent around farming, and it's still framed largely as an incremental change need with some technology developments in the seed space and some better agricultural practices, rather than just recognizing that there are going to be large swaths of sub-Saharan Africa and other parts of the world that will simply no longer be able to produce soil-based food. And so I think we're still on that third point, in a frightening state of denial for all the reasons that we know, political and this and that and the other.
Yeah, no, thank you. And thanks, David, for letting me intervene. And I'll pass back or just say, Simon, it strikes me that maybe you hit on your career advice that you try to avoid giving in that response, which is the willingness to smother your darlings and to move from one set of ideas to a new set when the situation demands it. And in whatever degree, I think that would be pretty good career advice for whichever group of students you encounter next. But David, do you want to reframe your question again?
So we've started to unpick this argument in favor of we need to put a lot more focus onto adaptation, and maybe then start to get into, so what's the particular angle that you're hoping Morphosis can help to fill?
Right. So markets misprice risk. I think probably the three of us can agree on that in multiple dimensions. And there are many ways of describing that. But there's very little doubt that climate risk is grossly mispriced across the financial economy and the real economy. And that has implications for businesses that are trying to market adaptation solutions. And we've thought a lot about that in relation to mitigation products, lower carbon energy systems, say, but we haven't really thought about it in relation to water, food, health systems, different types of infrastructure, where market mispricing and policy gaps, lead adaptation solutions, not surprisingly, to be too expensive, for there to be ready substitutes that have short-term applicability but not long-term applicability. And the result of that, amongst many other things, is that adaptation solution businesses, tend to have a suppressed profitability. That might mean they're unprofitable, or it might mean they have lower levels of profitability. They are undervalued. They struggle to raise capital, and in struggling to raise capital, they struggle to go to scale. And in struggling to go to scale, they struggle to bring down costs, which means their costs and prices remain high, which means the level of deployment remains muted. That's the classic vicious cycle that we've all been dealing with actually across multiple aspects of sustainability, even if we've never really talked about it quite in that way. And so on the supply side of our business, where we would invest in a growth business with an adaptation solution, we can come back to a couple of examples in a second. We are not only looking at picks of businesses that we think have growth potential and address needs and so on, but we are looking for businesses that are struggling with this market distortion problem, where we can add value through strategic inputs, through market access, through policy influence. And that allows us, when you look at our leadership team, only some of whom come from the private equity space and some of whom are operators, actually know how to build and run businesses, and some of whom are economists and know how to advise governments on economic policy, and some of whom are technology experts and know how to deploy AI effectively. It means that we effectively have a merchant banking function for Series A, Series B businesses, where we're helping them not only raise capital, but develop their underlying approach in a way that can help them overcome these backward-looking market mispricing and policy gap problems. That's the supply side and one part of Morphosis. And although we're only applying it in relation to Series A, Series B businesses, the same would be true if you were applying it to private equities. And the same would be true if you were applying it to alternative investments like infrastructure assets. Yeah, it would look slightly different, but the same underlying argument would apply. And then on the other side of the business, which is the insight side rather than the investment side, and these are obviously connected, we're interested in the demand conditions for adaptation solution businesses. So what does it take to create what we are calling adaptation markets, i.e. markets that effectively reward adaptation solution businesses that enable them to raise capital, go to scale, bring down costs, and deploy more widely. So reversing that vicious circle into a virtuous circle. And that's all about economic policies, economic strategies, innovation strategies of governments. That's the whole enabling conditions side of the game. So effectively, we have the supply side of investing in businesses and helping them grow. And we have the demand side, which is in particular helping governments shape markets. So that's the policy enabling environment that we've seen work so well actually in the clean tech and renewable space.
Mm-hmm. And Simon, is it the failure to recognize the potential profitability of adaptation solutions businesses? Is it yet another short-termism problem that, yep, those might be beneficial and profitable later, but things aren't so bad yet that I can't keep behaving in the way that we've been behaving, and we don't need to implement those adaptation solutions yet? Like, is it that failure to bring these things forward and to calculate their value over time?
So certainly, there's an interesting piece in the results of the MSCI Institute survey on climate and finance, which is when they ask investors when they think climate risk and adaptation will become important. And there's a huge preponderance of people that talk about the 2040s and beyond. Yeah, even although Bloomberg last year estimated that climate damage to the business community in the US in 1 year amounted to $1 trillion. Yeah. So part of the answer to your question has to be yes, Mark. that short-termism is sort of part of the story. But then somebody should say, but Simon, surely the insurance sector would get that pricing right. And I'm sure that's exactly what you were about to ask me, or could have asked me. And the answer appears to be that the insurance sector isn't getting that pricing right. Yeah, number one, that it's quite clear that the long tail on mitigation is now much better specified than the long tail on adaptation. So I would say, yes, we know, what low carbon is or isn't going to look like in 20 years, but all of those transition risks, we've all spent just a gazillion amount of time trying to quantify and crystallize and price those long tail transition risks that bring all that back to the present. Yeah, so the technology effects, the policy effects, the market competitiveness effects, and so on and so forth. But in the adaptation space, we don't really know that. Yeah, we don't really know how that applies to food or water or sanitation or health systems and so on and so forth, because we're not planning for a low carbon economy that looks pretty much like today's economy, just without the carbon, which is this beyond that was the problem with the Paris Agreement, which is it gave us a mental model that it was all going to be pretty much the same, just with solar, not coal. And so we'd have the same economy, more or less, yeah, but just run in a different way. But given what's baked in climate-wise, our economy isn't going to look anything like what it looks like today in the future. It's inconceivable. It's just inconceivable. Take food, take any topic you want. 4 billion people water stressed. That will not be solved in any way apart from through capex intensive water recycling and desalination. There isn't a watershed solution that's to do with nature investment that is going to solve to that problem. Yeah. And so one begins to think very differently. And I don't think the insurance sector, obviously the insurance sector in part contributes to that. They're able to particularly shape our understanding of direct physical risk now and now over the next few years. So that area is the most calibrated by the insurance and reinsurance sector. But these dynamic transformations of sectors is really, is a very unknown parameter. Just think of AI as an alternative, but the same argument, that we know the industry hollowing effects and the productivity enhancement effects of AI over the next 10 years are going to be absolutely extraordinary. Yeah, but find me the person who can describe it in a way that you really find believable. Yeah, it's very hard to do. We know that's going to happen, but we really struggle to price it across different asset classes.
So which are the sectors which you think are most exposed in the next few years? You mentioned in insurance just now, but which would be some of the others?
So the Singapore Sovereign Wealth Fund, GIC, not Temasek, published a nice report. There are now hundreds of reports appearing like confetti about adaptation finance. It's sort of, that's the hockey stick measure, right? Just sort of, it's the confetti moment. But the GIC report, I think, is quite good. Several of them are quite good. I think the Boston Consulting Group private equity piece is quite good as well. But the GIC's headline is adaptation is the inevitable investment. And our version of that in Morphosis is that adaptation is the future source of value. Yeah. So the first part of the answer, David, is that it's hard to imagine any assets that will not be affected by the need for climate-related adaptation. And just as parenthesis, I've for the first time said climate-related adaptation rather than adaptation. And we should come back to that because Morphosis looks at adaptation first and foremost through a climate lens, but with 3 interrelated pieces, one of which is geopolitics, one of which is AI, and one of which is nature. Yeah, and so actually one has to take the set to really understand what's going on. You can't extract climate and think about it independently of those three other primary axes, and one could argue other axes as well, but those are the other three that we're really focused on. So we're looking at climate as the foundation, but the disruption is encompassing these four different dimensions in total. So the first answer to the question is all assets. That adaptation is not a new asset class. It is a characteristic of change across all asset classes. And I think it's important that we don't get stuck in the way we have with clean tech and nature, that we think of them as distinct asset classes. I don't think that's a helpful way of understanding what's going on, number one. Number two, Morphosis has a focus. And our focus is in what we describe as basic needs for low and middle income households, which is not just in the global south, is also in the global north. So what do we mean by basic needs? We mean water, food, shelter, health, security, and finance as a set of assets as well, not just as an enabler. Yeah. Now, one could debate that until we're blue in the face, but those are the sort of the market segments that we're most interested in. But the reason that we don't have a sector-based investment thesis is because we're not convinced that those current market segment, or that way of defining sectors, is actually going to be helpful in the future. Yeah, we're not sure that that's really what's going to help us understand what the new adaptation solution businesses are. And so we approach it slightly differently, and we go, what's common across this system for us on the investment side of our work is that we have a strong belief within our thesis that all of those areas will move into will move into what we would describe as distributed infrastructure solutions. So in countries and communities that are increasingly climate impacted, what goes first is the ability to maintain centralized infrastructure. And what goes second is the willingness of the corporate sector and global capital markets to get involved in those countries at all. Yeah, so I do some work for a major global asset manager that invests a lot, shall we say, globally in infrastructure, and their position is quite clear, which is that they expect within 10, 15 years for larger and larger parts of the world to be uninsurable and therefore uninvestable, and so there will simply be no capital market assets flowing into those regions for infrastructure. Yeah, and so we're not only focused on those areas, but we do think that across all of those basic needs areas that I've just described, we think what's going to be similar are a new generation of distributed infrastructure solutions. Now, we already know what that looks like in the clean energy space. We all know what that looks like, distributed, energy infrastructure, and but that will happen increasingly with food, and that will happen increasingly with water, and that will happen increasingly with the other areas that I've just described. Now, that doesn't make it unimportant that one has to understand what food is about, but it means there are going to be more and more similar intersecting ways in which to understand the emergence of these different forms of effectively distributed infratech.
Simon, I'm torn between pursuing that, but also I think wanting to shift to talk about who is looking at adaptation opportunities, how. One of the things that you and David had a chance to talk about before we got together today that I was really interested in was a sense that adaptation solutions, when they're seen more clearly, may cut better across the political spectrum than some of the legacy environmental campaigning or climate positions have. So can you talk a little bit about why folks on the left and the right may come to see adaptation in a more balanced and attractive way?
Before Orban was thrown out, he hosted about 6 months ago a large meeting in Hungary of 600 right-wing activists from around Europe. And it's not the first that he's hosted, and he's not the only host of those folks, but it just happened to be one that somebody I share a board role with attended. And what he returned with was a view that I thought was confirmed in many other conversations I've had. First of all, that there were very few climate deniers in the room. Yeah. And so that's the first comment to our liberal intelligentsia, which is, not all people on the right are climate deniers. This is simply not true. Yeah. The second was that the primary objection was to the net zero agenda. Yeah. And in fact, the primary objection was not to technological solutions or business opportunities or even necessarily government policies, but that had become so entwined with a progressive liberal agenda that it was a policy framing and a public framing that had to be torn down. So I don't even see it as a sort of substantive objection. Yeah. I think it's because it's entwined in an ideological battle where the net zero agenda becomes the ping pong ball, and if the future of the planet has to be described as a ping pong ball, it sort of is a sign of the times. And the third reflection that came back was they had a whole bunch of sessions on climate. Yeah, this was not a discussion in the toilets. And what became clear to my colleague who was there, not a colleague from Morphosis, but from elsewhere, was really they were searching for a strategy. They were searching for an agenda. Yeah, that they weren't trying to push anything else away. They were going, climate change is really important. What do we do? Like, what's our position? To which the answer is, across the right, there is no position apart from being antagonistic to a net zero agenda. Yeah, for reasons that we can debate. So what does that mean for the next round? So I can only offer a speculative view, which is the assumption that, let's call it, the progressive liberal community has, which is that rightly or wrongly, for better or for worse, they own the climate agenda, is wrong. It's just wrong. It's a misunderstanding. And it's not just that the other side is against it, and that means that they own it more and more. It's that the right will begin to develop a climate agenda, and it will be focused on the populist interests of people who support them. Can they insure their homes? Are they going to get flooded? Will they still have jobs? All the things that actually are what people vote about. And when you unpack adaptation and stop using the word adaptation, which is probably a good idea, certainly in political and popular circles, then actually it's all stuff people really care about because it's stuff that directly affects them. And so the good news, and there is bad news, the good news is, that I don't know how far you go right, but I think the right will evolve a pro-climate action agenda, which will be an adaptation agenda. Yeah. But hasn't yet. That is to come, and that is work to be done. But work to be done by people who don't feel fragile in which community they want to be part of. That comes back to, why did the international trade union community say I could go and work with Nike? We need people that can cross-dress. There's no doubt about it at all. But the bad news is that parts of that adaptation agenda will be very problematic. Because actually, anti-migrants is an adaptation agenda. If we convince the right that there's going to be 1 billion migrants, that just means the walls have to be higher. Yeah. And so the fact that they adopt a climate adaptation agenda of sorts is probably partly good news and is partly really bad news, because there will be pieces embedded in the way it evolves that will be really, really profoundly problematic if we think that solidarity is going to be the scarcest currency in the future, in the context of climate change. And then just to add sort of one more piece to this sort of complicated puzzle, the adaptation agenda will become another clean coal story. In other words, just like nature has been co-opted by the fossil fuel community in arguing, oh, if we just invest in nature, then it can absorb more carbon, and so we don't have to mitigate so much. That's why the last 3 COPs that were all run by fossil fuel producing countries were so big on nature, not because we were successful, but because it made total sense to them to focus on nature. So the same thing's going to happen in the adaptation space. Radical adaptation, that's what we need. Well, then mitigation, we can get on with it, but now we know, we're all going to do radical adaptation. Then mitigation is not, we're not all going to die at 1.6 degrees. Let's all calm down a little bit, which is, of course, exactly what Bill Gates said in his letter. And so the Bill Gates letter sort of exemplifies the right things to say and the problems associated with it all at the same time. It was a sort of perfect sweet spot letter of right, correct, and a sort of nightmare, all in one sentence. Because actually it was a pure adaptation letter. That's really what it was. It was all about adaptation. When you think about it, really.
Yeah, giving all kinds of permissions. And
right,
Simon,
just to finish the sentence, it was put out, a month before the Belém COP, and was definitely taken by the right as a reaffirmation that Gates and others were no longer supportive of the mitigation agenda. So that political tension is real. It's not abstract, or theoretical.
And I was curious to quickly follow up, and David, I'm sure you're sitting on something too, but you got quickly into the nuance of language, Simon. And you talked about why a populist agenda might speak about jobs and food and security, and that those things will attract, and that's what people vote on. And so adaptation is going to be defined and redefined. And we've talked in a number of recent episodes of the podcast about the failure of building an effective climate narrative, climate and sustainability more broadly. And so maybe this shifts a little bit to your future view. Like, how do we build the most effective adaptation case going forward that is most attractive to the most people and most impactful in actually addressing the problems at hand?
Well, it has to be able to come out of the mouths of a lot of different types of people. So that would be where I would start. So this is not a singular ideological agenda. It can't be. Number one. And I'm sort of slowly sounding like I'm politically drifting off to the right. I think we're living in a world where the progressive left, by whatever name or measure is, with one or two noble localized exceptions, is on its knees. And I don't see it getting up immediately. So it has to work across the political spectrum, number one. Number two, it has to connect more to people's fears. And people are not frightened of carbon. They're frightened of water and fire and drought and expensive food. And I'm really sorry. It's not that I want to freak everybody out, but people vote for good reason. And then thirdly, it has to offer a much more decentralized view as to how adaptation actually happens. Yeah, I don't think there's space for a Tony Blair saying, I've got the adaptation answer. Yeah, I don't think that's really the story at all. So we need to think about not only where the voice is, but who are the actors that can be part of execution, that have credibility and agency. Yeah. So, and that may not be the same people as those necessarily with voice. And then, I fear, I can't remember who was it that wrote about multi-stakeholder initiatives, sort of uncomfortable bedfellows. I'm sure one of you remembers where that originally came from, but we're entering into that space. Yeah, where we're going to have to decide, are we willing to work with governments that are dealing with food security issues, but are highly antagonistic towards, dealing with migrants in any kind of progressive way. Yeah. And I think, that already is fragmenting us. Look at the Danish policies on migration, for example, but there are others that we can point to as well. That there isn't a sort of unitary package. Yeah, there's a sort of pick and mix in the way this is going to work. And then just the last piece, I want to come back to this link between adaptation and mitigation. The negative assumption that most of the climate community continues to make is that if you go for adaptation, it reduces your efforts on mitigation. And there are some underlying large-scale behavioral assumptions behind that proposition. And they are untested. They are untested. And there is a different way of thinking about it, which is that leaning much more heavily towards the need for radical adaptation, I think can accelerate and reconvene interest in mitigation. So I think we have to find that sweet spot. It's not just that it's a solar panel that does mitigation and adaptation at the same time. There's co-benefit structures as well through certain assets. It's more than that. It's a behavioral narrative side. That pushing more on adaptation needs to increase people's interest in mitigation. Because if it doesn't, then unintentionally, it really does become part of the problem by default.
There's lots of different areas we could drill down in more. We're almost out of time, but just
Sorry.
before we do finish, I would love just to end on a really positive, upbeat note around, if you're really successful, you and your colleagues in Morphosis, what are some of the things that you're going to be proudest of 10 years time when you're giving your next tutorial to students and they say, tell us about the recent career of Simon?
I think adaptation will be an embedded part of the way in which we think and act about economic policy and industrial strategy. Yeah, so it won't be a side game. We'll be thinking about climate adaptation and other aspects of adaptation much more fundamentally in the way we develop economic policies and strategies. So that's one part of it. So that's on the sort of government policy, public regulatory side. And then I think we will have much more sophisticated analytics to enable us to invest more effectively in adaptation solution businesses. So they will be able to raise capital more cheaply at scale. And part of the reason for that, as we've achieved in the financing renewable space, is that there will be a much more standardized set of frameworks, both on the policy and on the investment side, to understand adaptation. We haven't really talked about the challenge of the apparent heterogeneity of adaptation, which appears to defy the possibility of standardization across sectors. But certainly our view is that that is possible. And then I would sort of end by saying, end where I started, at least a little bit. if I go back to the billion refugees for a second, or whatever the large number really is, but that community is never going to have a Westphalian passport again. It isn't that they're going to get a passport in Sweden. That's over. Yeah. At that kind of scale. And so that means a billion people on the move permanently and their descendants. And that means rethinking sovereignty, a different way of thinking about nations, a different way of thinking about how people organize. And I do think we're moving into an environment where that sort of rethinking many of the pieces of our current modern architecture will not become an interesting idea that we do through scenarios because we went on some slap happy course in Santa Fe, but because the conditions are such that our modern infrastructure is collapsing and really new things are really beginning to emerge. And I think we saw that now looking back in a much smaller way as we moved through the 80s. That's when the responsible movement really began to emerge in the face of a kind of neoliberal privatization, hard environment. And I just think the adaptation agenda is going to do that, on steroids across many of our modern pillars that we currently make assumptions about.
Because there are all those extra dimensions of geopolitics and AI and all of the constraints on biodiversity loss and nature, which you referenced earlier. Simon, as always, it is fascinating to talk to you. I've got loads of notes to go off and do my homework from the conversation. I suspect that this episode of All in the Sustainable Business podcast is going to generate a lot of debate and interest. If you have a point of view, whether you agree with Simon's arguments that radical adaptation can be a stimulus for further mitigation, whether you disagree, go to the LinkedIn page for All in the Sustainable Business podcast, respond to this episode's posting, and we'd love to see where the debate develops. But for now, thank you enormously for your time today.
Thanks so much, Simon.
And thanks to both of you very much for inviting me on.